Hey, what's up, my construction entrepreneurs? Been a long time here. Hey, on this video, taking a little walk here in Orange County, walking away from this job while my guys are pouring some concrete. But I wanted to talk to you about what are some of the things that you should know in the process with getting workers' comp as a new contractor. Okay, so eventually you will need to get workers' comp if you plan to grow your company. Okay, a lot of us start out when we get our license, we do file the workers' comp exempt. Okay, which tells the board that we do not have employees and we're just a one-man operation, a one-woman operation. Okay. Most times in the beginning, that's not true, right? We are, paying people underneath the table in cash and supposedly 1099ing people, which is not the right thing to do, okay? You only 1099 contractors, not employees, okay? And contractors and employees is black and white. You cannot just have someone working on your job as an employee and trying to pay them as a 1099 contractor. Okay, that's a time for another video there. But once you do decide to get workers' comp, the only there are insurers out there that will carry your workers' comp policy. It's not a lot. Very few. Now, they are the few that are out there. I have heard of contractors with new licenses, getting workers' comp, other than like the conventional workers' comp. I've heard new contractors getting like pay-as-you-go workers' comp, which is great, right? Pay-as-you-go workers' comp is a break for us small contractors and new contractors, and mainly for the new ones, are not established as much, I want to say, because it allows you to pay workers' comp when you have payroll. So you pay all your payroll taxes once you have payroll, okay? And that's assuming that you will not have payroll all the time, okay? The conventional workers' comp policy for a new contractor will usually be through state fund here in California. It'll usually be through state compensation insurance fund, which is through California. They will definitely insure you, and they will definitely audit you at the end of your policy. Okay. Being audited at the end of your policy just means that they will be checking to see if basically you're trying to, do fraud or, pay employees and not pay them through payroll, not have them insured through your policy. That's what they're looking for. So they'll be doing the audit through probably most likely your bank account or some type of accounting system that you're sending them. Being small, you don't have to hire another third-party firm to kind of go through your books or anything like that. But when you get this policy, a lot of us will go through brokers, right? Now, if you're going to try to get a pay-as-you-go policy, you definitely need to go through a broker, okay? You need to call someone and ask them to find your policy. You give them all your information, and I actually filled out a workers' comp or I filled out a workers' comp application on my channel. So check that out. I filled one out before. So you can see all the information that they're asking for and all the things that you need to fill in, okay? I'll try to link it down here at the bottom of this video as well. So if you go with a broker, the broker can look for someone that's willing to insure you, that can actually get you a pay-as-you-go policy. But most times, if that broker cannot, they would just be submitting for a policy through State Fund. Now, this is what I'm here to tell you. Getting a policy through State Fund, you do not need a broker. You can actually just go online to State Fund and fill out the information to receive a quote, okay? You do not need a broker to get the State Fund policy, okay, for your workers' comp. You do not. Once you get a quote back, you're going to be assigned some type of representative or agent, okay? They're going to give you your quote, what your policy is. Also did a video on understanding policies. I think I'll do another one. But you're going to get your rates that you have to pay. Your rates are per 100, okay? Once that agent sends you that policy, they're going to give you an expiration when that quote will no longer be good. You know, it'll expire. So you have to pay whatever premium that they're asking you to pay, a down payment. Usually that will range. Okay, so when you first get to workers' comp, you want to start off small, okay? Unless you got a ton of money in the bank that you can pay regular policy for, you want to start off small. So when I first got my first workers' comp policy, I told them I was going to have 40,000 in payroll, I believe, 20 or 40,000 in payroll, and I was going to be between 2 employees part-time. So that means that each employee was going to be making 10 to 20,000 a year. Okay, and they gave me a policy based on that. Now listen, once you get that policy based on those numbers, you have to remember to account for what the true number is, because once they audit you, any workers' comp, once they audit you, you will have to pay that difference. And that's the thing that gets us new contractors in a lot of trouble. We think that what we were quoted is what we have to pay, not what actual hours is recorded is what we have to pay based on our rate. So you get a policy, you pay $2,500, and you're like, great. At the end of the year, you get a bill for $65,000, right? Because you got 500 grand in payroll. Well, a lot of companies are shocked by that because they did not account for it. That's why it's important that you understand your labor burden percentage, your labor burden rate for your company. This is very important. So you can actually have those funds available for at the end of your policy, or whatever type of policy that you have to pay into, and you can pay that money off. Okay, you can pay that off free and clear, and not have to worry about being denied or not being able to get another policy with whatever agency that you have filed that policy with. Okay, so once you tell them that you're gonna have, say, 40,000 in payroll, they're gonna, and then once you pay the fee, let's say the fee is $2,200. Okay, State Fund is going to give you a minimum amount that you have to pay per quarter. Okay, so let's say for a small policy, you might have to pay $450 a quarter. Okay, so every quarter they're going to send you a bill. Okay, and then every 2 quarters, I believe, they will ask for your payroll totals. It might be every quarter, I forget when they will ask for it, but they will ask for your payroll totals. Okay, You give them your payroll totals, they will have a bill for you at the end of your policy. Okay, that's gonna shock you. Okay, and then next year, if you stay with State Fund, you know, you may have to start paying every quarter now instead of every year. Because you have recorded a smaller policy with them, that's why they're gonna have you pay every year, okay? Now when they see your actual numbers, you're gonna have to pay the real policy premium, okay? So let's say you start off with the 40 grand, okay, a year. That's what you tell them. At the end of that, you have 500 grand in payroll, okay? And then you get hit with a bill for 65 grand, and then now they want 11,000 down for the next policy. They will allow you to pay that 11 grand. Instead of just paying up front, they allow you to pay it in installments. So you'll get a per month amount that you need to pay in regards to your policy, having that policy. And at the end of that policy, they will also do an audit, and then you'll get a bill for the remaining time or recorded hours that your payroll will be, okay? That's how that works, okay? Once you have that that policy with State Fund, you will get an access to your State Fund portal. On the portal of State Fund, you can see your policy. You can file claims. You can find questions, answers. Also think you can see your rate on there too, okay? But once you get on there, you can also file for your additionally insured. So a lot of companies that you start doing bids for or get work for, they want you to additionally insure them and add different endorsements to the policy, okay? So you can also do that there. Now with State Fund, anytime you have a contractor that you're doing, let's say you have a contractor here that you're doing work for in California, but their corporate office is in Texas, right? So you have to additionally insure that company, which their main office is in Texas. State Fund will not allow you to pull that cert from online. You will actually have to call for any out-of-state additionally insured certs. So you'll actually have to call them and then give them that address, and then they will send you the actual cert that you need to issue to that whoever that customer is. Navigating through the portal is pretty easy. As soon as you do it, you'll see that is pretty easy to understand. You know, you can hire someone you definitely should hire someone to do all your office work. You know, after you become a one-man show and you start, you know, getting into some other areas, you definitely hire someone to do this. And because we can't wear all those hats where you're estimating, working in the field, and doing the admin work. There's no way all that's going to happen. There's no way anyone is doing that unless you're doing a very, very small amount of work. But if you're looking to grow and, you know, have, you know, at least 10 employees, you're going to need to hire someone, and hire someone that know what they're doing. Don't hire someone that do not know what they're doing, because this is going to take up a bunch of your time when you need to be focusing on growing your business and bringing in a boatload of cash. So, my construction entrepreneurs, I'm going to let you go with that. Hopefully that was helpful, insightful, and hopefully that cuts the edge off from you wanting to get your workers' comp, because you should go and get your workers' comp as soon as you can, before you even need to. You should have your workers' comp. That way, when you're ready to go for those jobs, you may even start bidding on those jobs. Get it in place now, okay? Get the workers' comp in place now. It'll also be a push for you too as well, because no sense you having workers' comp and not utilizing it, because you're just paying and paying and paying. So, and then plus you want to grow your business and, you know, run a successful legal business. So get your workers' comp, It's not that hard. It's not that scary. I thought it was when I first went for it, but once I did it, it was a piece of cake. You just have to understand that if you don't have a whole lot of money to, actually say what you expect your workers' comp to be, and then you don't even know what your workers' comp is going to be. You really don't. But so you just start off small and make sure that you do um, not account for what your workers' comp rate would be per job per person, because you will have to still pay that. Please understand that. Okay, you don't want to get into a low policy, and at the end of the policy, you find out that you owe 100 grand, and you're like, where am I going to get this 100 grand from? Then you're in debt 100 grand with a government agency. So, not a good look. Okay, they're always willing to work out payments in some form, some fashion, but you definitely don't want to be in debt. Not that type of debt, anyway. So, if you have any other questions, want to figure something else out, let me know. I always answer questions, comments. Okay, go get your workers' comp policy and grow your business. My construction entrepreneurs, hustle hard, then hustle harder, and catch you on the next one. Thanks.